Mihir Vora on this extremely critical day. CIO Trust Mutual Fund needs no introduction. Mihir, hi, very good morning. This is Harsh here. Give us a sense. How should one currently navigate the market? Is it a sell on rise? Should one wait for lower levels? Should one start deploying? What should the strategy be?
Hi, good morning. See, there are so many moving parts that doing nothing may be the best thing to do, frankly, because beyond a point, nobody knows anything. The way things are escalating, de-escalating, there is hope and then there's despair with every tweet by President Trump and from the Iranian side. There is not much of a view that one can take in this whole thing. But having said that, there will be some damage in the medium term to some of the segments. So I would say that because valuations are going to correct so sharply, and they have been correcting in a few stocks very, very sharply, you will get a chance to kind of take a long-term view sooner rather than later. And that's when I think anybody with dry powder and cash will be king. I think in the next few weeks we will get one of the brilliant chances to invest. But I would not put all in one shot. I would stagger it out based on the news and the levels.
Mihir, financials have been the most hit, led by HDFC Bank. Do you think this year it will not be the year for financials?
See, if the market moves, I don't think it can move without financials. And the way financials have underperformed, I would say they would actually end up leading the market if the damage is not long lasting. So if this issue lasts for beyond a few weeks, then you might see pain happening in the MSME sector, in some of the small businesses on the retail side. That can trigger a bit of a cycle. But if the issue gets resolved in the next few weeks, then I don't think there will be any lasting damage to the financial sector, the banking sector. In which case, I think we'll be back to growth. We'll be back to the fact that we still have good balance sheets as far as the banks and NBFCs are concerned. There is ample room for growth, and the typical secular theme that we were talking about in terms of penetration, etc., that will continue. So if this thing gets resolved soon, then I think financials will be a good place to be. If it prolongs for a few months, then you might see a bit of underperformance continuing.
Mihir, has a collateral damage, and not just equities as an asset class, but now gold as well is slipping down. And because of, the impact of oil prices, you think consumption will take a hit. And those are the sectors that one would steer clear of as opposed to what the case was 3 months back.
Absolutely. But that's, as I said, it's only the situation if this issue lasts for a long period of time, then there can be medium-term damage to the consumption theme. If it doesn't last for a very long period of time, if we get back on track sooner, then I think the consumption theme still remains because that's basically one of our core strengths as an economy, because of our demographics, etc. So that should continue. So I think a lot depends on whether this issue lasts for a longer period of time.
And what if it were to? Because Mihir, you seem to suggest at the opening part of the conversation that we'll have a very good opportunity to buy in the coming weeks. If this were to prolong, how large is the risk to earnings? And we'll have Q4 coming out very, very soon. So we'll start to see commentary trickle through, even though you may not see a full impact in terms of numbers, but you'll start to see that negative commentary trickling through. You believe that there is a large risk with regard to an earnings downgrade for FY27 in a significant fashion?
See, some downgrades are going to happen. The good thing is that the December quarter numbers, actually, if you remove the impact of the labor code, etc., have been quite decent. So as we have been discussing, there are green shoots in the economy which were there before the whole Middle East thing blew up. So that economy was on a cyclical uptick, I would say. But having said that, this development, even if it's now in the third or fourth week, is a negative, and you might see some downgrades in the March quarter after the March quarter results. Not too many, but as I said, expectations will start deteriorating if this thing elongates. So I think a timely resolution, early resolution of this crisis is in our best interest.
Mihir, how do you look at the second order impact on companies, especially those dependent on gas or derivatives of crude. Many of them now facing supply constraints and also production cuts because of the constraints.
Absolutely. So, as I said, the first pain will be seen if this elongates in the MSME and the small businesses and the retail segment, because that's where the holding power or the resilience is the least, so to say. And then if it continues, then you might see the medium and small scale and the larger units getting impacted. So I think the bottom of the pyramid is where the maximum stress can happen if at all this lasts for a longer period of time. Otherwise, I don't see too much of an issue as of now in the medium, in the mid caps or the listed companies, or whether it's a small, mid, or large listed companies, not so much. But the unlisted space, the MSME space, that's where, and the retail space, that's where some of the issues can crop up. You also have issues with fertilizer procurement. So some of the second derivatives can be in the farming segment, and so that's a lot of moving parts that we need to think about.
For the mutual fund investors, Mihir, does it make sense to make those classifications, stick to large caps, small or mid caps, or do you think flexi caps is still the best approach?
I'll still go for a flexi cap approach because there at least the decision to be in which cap rests with the fund manager. So that's one less decision for the investor to make. And frankly, when the markets are moving so fast, both on the upside and downside, strategic asset allocation, you can't change the strategic allocation too often at the investor level, which probably the fund manager can in a multi-cap or a flexi-cap category. So I think that remains my core category, the multi-cap or the flexi-cap category.
Mihir, how are you looking at the entire pharma space from a diabetic portfolio point of view? You have semaglutide, which has come out. 10 companies have already launched. There's another 14 companies in the pipeline in domestic companies to launch this drug. Do you see the way the diabetic drug market is now going to play out change for many of the companies?
Certainly. It remains to be seen how profitable this segment will be, because as you rightly mentioned, there are a lot of competitors. But then you can play it by some of the equipment manufacturers or some of the suppliers who are actually, supplying some of the going upstream basically into some of the pen makers, etc. So that's where we also have some exposure to. So we do have exposure to some of the GLP plays, but we also have exposure to the ancillaries to those, so to say.
We're curious to know what the view with regard to IT is, because now we've seen a significant correction, and from the high, in fact, of 45,000 on the Nifty IT, we've seen a meaningful correction now. How much of this is built in? And I'm trying to get to the fact that most IT companies have come out and suggested that the AI, tailwind is in fact going to be beneficial to them. It's going to be a tailwind rather than a headwind, whereas the market seems to be in a totally different mood. If commentary were to change Q4, will that likely spur positivity within that Nifty IT pack?
So our view on IT services has typically been underweight and negative because structurally it has become a single-digit growth sector, especially the large cap IT companies. So in general, we have been negative. Having said that, the kind of negativity and pessimism that we have seen in the last couple of months because of AI and the derating that we have seen in the IT segment probably may be a bit overdone. So tactically, maybe it's becoming relatively attractive. I don't see any major change in the commentary happening, frankly, after the March quarter, because things are moving very fast. So on one hand, probably things on the AI threat are not as bad as expected. But you also will have the US corporate sector taking a backseat and relooking at its own capex, etc. If the war situation continues, there is a chance of a slowdown, etc. So there are pluses and there are minuses. But with stocks down 30%, 35% in some of the cases, and some of the large cap names, probably it may be a time to bottom fish a bit. The currency, the way the rupee is going, also is a positive for some of the IT companies. So I would say it's more of a value play, of more of a defensive play. But in this market, that might not be a bad thing.
Okay, wait and watch. That's what one can do, and continue patiently with one's sips. But Mihir, great to have you on the show. Thank you so much.
Always a pleasure. Thank you.